we've got the 5 deadly mistakes that traders make. The first thing is traders keep changing the system. And this is how everybody starts. In fact, even I started this way. I wanted to get a system, and it strangely does well for about a month. And then after a month, it doesn't do great. I enter that drawdown. Everyone knows what a drawdown is that correct? Great. Well, it enters into a drawdown, and then I throw it away. And then I go find the next best system. And I want to trade, and I get 2 months of gains. And then I enter a drawdown. And then I got to find the next system. Constantly, people are looking for that system. They're looking for that holy grail. They are looking for that holy grail. They're looking for that system that is 100% winner. The be sure, fireproof. This is the winning system. No, the winning system is in your mind. The winning system all depends on your trading personality. It's going through trial and error of seeing what it is. I got to show you what my first system looked like. And not my first system. It's actually a bunch of years that developed into what my system was. And here was my system. Looks amazing. It looks exciting. It looks like this is trading. It's got the ADX, the Williams-Cent R, the RSI, the momentum, the overbought, oversold, the unbalanced volume, the moving averages, everything. I don't use any of that anymore. I've learned to not use it. It works for some. Most often, if you develop the system in the right way, it will work. But I don't believe you need any of these indicators to make money in the market. Because these indicators, does anybody not know what an indicator is? Hands up. Okay, great. Because it's very difficult to explain what it is, because it's basically just a bunch of data that's been used in the past to determine what's going on. But it's not what's going on in the future, it's what happened in the past. All of these things is based on the data that's already occurred. Okay? So there is no future indicator. You can see, I was like sad over here because it didn't go my way. You can see that the arrow came down. And I was like, no, this is now going to come down. It goes down, but doesn't mean that the market's going to go down. It went up. Now, the trick about indicators is that it's a self-fulfilling prophecy. Your mind is developed to say, oh, look, it worked over there. It went up, it went up. I would have made money. Now you take 1,000 trades, average it up, and you'll see whether it makes money or not. If it makes money, great. I'm sure these systems do work in that case. All right? Sometimes they don't, sometimes they do. Again, you cannot base a system on future indicators. Right? I even created indicators. I thought that was it. You know, there's thousands and hundreds of thousands of parameters or numbers that I put into my indicators that I've optimized on Metastock or IG markets. I did an optimization on 100,000 different strategies on all of these indicators specifically. And all of them ended off with losses. So I went through that extra step of learning the programming of the system, of learning all the systems, and it just didn't work. And I was like, this doesn't make sense. Therefore, you can't make money. That's what I had. I said, therefore, if this doesn't work, and I've tried all the successful indicators, you can't make money. What I didn't think is that you can make money, but with rules, right? So you need rules within these systems. Maybe all these systems work. Maybe all these indicators work. And they probably do. But it depends on how you go about the system. The trend is your companion. FSP, we don't like cliches. So, trend is your companion. It's better to go with the market than against it. Okay? You don't have to guess where the market is going. It's self-evident. You don't need to predict when the market will turn, only to anticipate and act on that change in direction. You can remove the stress factor out of your life by going with the trend. So, but I'm not a trend trader, but here's an example of trend trading. Trend trading works. I've done it. It's great. It succeeds. It's profitable. I love it. But I prefer breakout trading, which I'll explain. So what am I saying about trends? Like I said, it develops a point, develops another point, develops another point, By the time you draw this line, is the trend a magical level? You know, how is it possible that it will bounce off that point, that it bounces off this trend line? Like, what is it out of $5 trillion market, does it bounce off this level? In this case, what is this? Oh, this is the rand. There we go. There's our rand. Can you believe it? This is our rand on a monthly basis. So on a monthly basis, it's going up. But it's not going up because of a trend line. You know, they don't say, oh, let's just weaken the rand even more because it's on the trend line. It's a self-fulfilling prophecy with these supports and resistances, as the doctor has mentioned. It's where, if it bounces on 3 levels, I don't only see those 3 levels. Countless people see them. So they base it on their support line or their trend line. Here we are with the market environment. Here is this is what I use. I can see green candles, I see red candles, and I see a whole world in here, you know. And that's the trick, is to identify what you see. It's not about what happened in the past. That doesn't matter. It's about what are you looking at now and what's going on. And I've got to give you an example. The Berkshire Hathaway share. What value is it now? Can anyone take a guess? Anyone? Berkshire Hathaway? It's about $156,000 a share. Okay? It's tremendous. So what am I saying? But I would still go long, even if it's $156,000. I don't care if it's overbought or oversold or whatever you want to say. I look at that little dot over there, and I say it's broken out of that level, so I'll go on. I don't care about overbought. I don't care about oversold. Overbought means it's so-called overvalued, and oversold means it's undervalued. It doesn't matter. You look at the market environment of what is happening at that time. So you can see here, we got a nice upside. So trend is up. We then have that sideways movement. Trend is sideways. Now I call this the neutral mode. You can write that down. The neutral mode is sideways. I'm not going to make money going sideways. I want it to move in a direction, preferably up, because I don't short. So then how do I base the bear mode? Does everyone know what it means? Anyone, hands up if you don't know what bear mode means, or bear. Okay, so you guys know. Bear mode means the market's coming down. It's going down. So this is the best way to remember bear and bull. When a bear fights down. When a bull fights, don't they bring their horns up? So it's a nice way to remember. Anyone have a question with regards to the market environment? The bull mode, it breaks out of the brim. Neutral mode, it's going nowhere. The bear mode, it's coming down. Now, break out and succeed. So 1, you'll already have your system set up. So I don't need to, I've got everything here. I've got my bull mode, my bear mode, I've got my stop loss, my entry, my take profit. I have my game plan. Can you imagine soccer players that they don't have a game plan and they just go in, you know, trying to win? It doesn't work like that. So we're on to our 3rd mistake already. Traders want to trade everything. So when you start off in Forex, it's a very exciting time, because you have over 200 currencies to choose from. I don't even know what these are. Norse, I don't know. 200 currencies. This is exciting in some way, because you're always going to get into a trade in this case. You should always get into a trade every day. If there's 200 currencies, you should get in. So why don't you? I only trade 9 currencies. We'll go into that later. But if you think about it, 200 currencies is an exciting thing. You want to sift through the currencies that match your personality again. I'm sure. Has anyone seen this before? Hands up. Great. Great. It's glad to know we've got readers. 9 major currencies you'll ever need to make profits. Those are them. We've already discussed the fun names. The doctor said, there's your loonie, the American dollar, Canadian dollar. Swissy, Swiss franc and American dollar. Aussie, Australian dollar, American dollar. The yen, Japanese yen. Cable, the British pound and the American dollar. Euro to American dollar, the euro. That's the most important thing that you'll need. Between three little, it's a SWIFT code. Society of the World International Financial, I don't know, something, SWIFT. It's, sorry? Yes, there we go. So we've got three little letters to tell each currency. That's quite nice compared to warrants. You know, warrants, AGL, SBQ, and all those complicated things. You'll only know euro, dollar, pound, yen. Now what's nice about this is that the end of the three letter code is what it actually is in terms of the currency. So the euro, dollar, D, dollar. Japanese, yen, Y, yen. CH, F, franc. CAD, D, dollar. So you can see, in this case, it's a nice, easy way to remember. Aussie dollar, D, dollar. And these are the only ones I trade. I don't know if you're writing this down. Does anyone write this down? These are the only ones that I personally trade, you know. And I'll tell you why. I'm not going to just say that's it. I'm going to tell you why I trade these. I'm going to tell you, you know, why I don't trade the others. Does everyone's got that? Great. Next one, why I don't trade any other currency pairs. So the first thing, there are higher uncertainties and volatility in these currency pairs, which can be detrimental to your trading. So you get into the Polish currency, you don't know what's going on in Poland. You don't see news what's going on in Poland. And the thing is, you've got a strategy, but Poland, there's something drastic going on. These currencies, anything that is not a major currency, even a minor currency, could be illiquid, right? Minor currencies are almost everything else. Emergent currencies, you know, the Chinese renminbi. So next one, there are generally high spreads, which means unnecessary costs for you. You don't need to pay these high costs in all these currencies. Choose currencies that you are paying 2-3 pips at a time. Don't worry about being exciting other currencies and all that, because you can. Worry about your costs that you have to pay. The gentleman asked, what tax do you pay? Nothing. What commission do you pay? Nothing. The commission is based on the spread, right? The commission costs, the tight spread between the bid and the offer. The first thing you do when you choose a broker, obviously, bid minus offer. Get that point difference, and that's how much you will be paying on average. Major currencies, the ones of those 9, you're not going to be paying much. There is a low volume traded on these currencies, which means you could battle to get into the level you wish, liquidity issues. So in the other currencies, maybe there's not that much volume. There's not much guys getting into these strange currencies. And so now it's almost like getting into one of the penny stocks in South Africa, the Alt X market, or one of those. Things are not going to go your way because the market is going to move at very strange ways. If a chart doesn't look healthy, probably leave it alone. Next one. Too many variables to consider in the movement of these currencies. This means the currency pairs lack transparency. So you don't know what is actually transpiring within those currencies. You don't know what's going on in the Saudi Arabian currency. You don't know what's going on in all of these. So it's important to know your currencies. Get to know them. Euro, dollar, pound. Get to know them specifically. Get to know their personality and the patterns. You know, they all have their own personalities, and some will suit yours, some will not. You know, the doctor loves the pound. He loves trading the pound. I love trading all those 9. You know, the doctor sees something in the pound that I don't, maybe. So again, it all depends on you. When deciding which currency trade to pair, as we know, lowest cost. As we know, high liquidity. Also, you'll know you'll get in and get out. You don't need to worry about, is someone going to fill my position? They are. That's important. You don't need to worry about slippage, you know, if you get into the market. Slippage Anyone don't know what slippage is? Hands up. Slippage is you want to get in here and the market goes in here. The slippage is the difference between. So the slippage is when you get into a position at the wrong price. You're paying more than you even wanted to. In fact, slippage, you could get in before the price you wanted to get into, and then it went your way, but it's still slippage because it's not your entry level. And in the case with the cup and handle, below the brim, I don't want to get in. I don't care how cheap it is. I want to get in based on the criteria. The criteria of the system is crucial. Which pair suits your personality? We've already spoken. Choose the currency with the lowest volatility so you don't get swung out of your trade unnecessarily. Currencies that move in the time you wish to trade. There we go. That should answer your question. You've got lifestyle, you've got children, you've got husbands, wives, and all that. You want to trade what suits your lifestyle, what suits your time to trade. And so that's very important. The mistake traders make is the stop loss. They don't stick to their stop loss. Did anyone read the article on 5 deadly mistakes traders make? Hands up. Hands way up. Thank you. Glad to hear. So now I'm going to reenact this. Not really. But basically I'm going to explain to you why a stop loss is very important in many ways. And as a new trader, because I know most of you are new, and that's very important as we address every little issue that I can think of in terms of the stop loss, is this. Say you're a skydiver and you're ready to go skydiving. What do you need to do? You need to equip yourself with a parachute. You need to equip yourself with an altimeter. You need to equip yourself with everything you need to jump. You're not going to jump without a parachute. You're not going to say gravity is going to stop because I'm jumping out of the plane. You know, you're not going to change the laws of the physics. So you're there at the top, you're panicking. You're excited as well because you know you're equipped. You know you've got everything in place. And you're ready to jump off. So you're holding on, and the next thing, you take that leap. But the problem is, it's the leap of no return. You can't decide now, I'm in the air, but I'm going to go back up. Okay? You're falling. You're in your trade. No. You've jumped off, you're in the air. But think of it as you're in your trade. So you're falling, you can see you're dressed quite appropriately, and you're feeling quite good. I mean, you're feeling great. You're feeling like you're falling. But then that stops. The falling stops and the floating begins. Because over the time, because you don't have a plane or anything to compare that you're falling, it doesn't feel like you're falling. It just feels like you're floating. It feels like the ground is coming to you. It doesn't feel like you're going to the ground. Because it's all relative. So you're falling and floating and loving it. And then, think of it as you're making money. You then say, at a certain time, I'm watching my altimeter. The altimeter, you know what? The information manual is wrong. I think I can handle a few 100 meters more. I'm enjoying this. I'm floating away. There's nothing wrong. I don't believe I got to pull it at that, the rip cord. I don't need to pull it at this time. I'll leave it alone. 200 meters, 300 meters. Okay. Looks like it's time to pull it. So you pull it. Parachute comes up. You're feeling good. You're safe. You're still in the air. But you're falling at a dramatic pace. And you're falling and you're scared. Because in your mind, you're constantly going at the back of your mind saying, you know what? The information manual was right. The instruction manual was right. I'm going to break a leg. And at least I'll learn for the future. Not a nice way to learn from your mistakes. Harsh way to learn from your mistakes. At least you learn from your mistakes. So, break a leg, give it time, go back up, follow the rules, land fine. So now with trading, it's kind of the same. You want to get into a position. You're excited. You're at the top. You're ready to take that leap. You get into your trade, and you're excited. You get in, and you feel like this is great. The falling feeling turns to floating. Things go your way. Your stop loss is there. Now, the stop loss in this case is the point where you pull the ripcord. So you carry on down, and the market turns the opposite way, goes against you, and it goes past your stop loss. And now, in the back of your mind, subjectivity kicks in. The mentality of your guessing kicks in. So now you say, stop loss, I'll lower it. Look, there's a support here. There is the indicators are saying it's going to turn here. Oversold, it's not even at 20. All these certain levels. And you're constantly saying that the stop loss is wrong. You're not looking at it from an objective point of view. You're not looking at it by analyzing the risks and rewards. You're looking at it in terms of, look, my stop loss is there. I don't believe it. The market is going to drop a little bit more and then it's going to turn up, but continues going down. By the time you get out and you pull that trading ripcord, you've lost the majority of your portfolio and you've lost your confidence in the market. And all you're saying is, why didn't I get out when I should have? I would have risked so little. And now I've risked so much. Why? Because I knew better than reading my skydiver's information manual. So what does the stop loss do? Protects you from severe losses. Also gives you a peace of mind. Knowing that you've got a stop loss in place can really calm you down. You know already how much you're going to risk. In fact, when I get into the market, I've written it off already. I always think, that's it. I'm taking a loss here, and I write it off. And things usually go my way. So I'm like, okay. So I don't have expectations. I've got a stop loss, got to take profit, does what it wants during the trade. Makes it easier to stick to your strategy. So you're not changing a stop loss, moving it, altering it, and all that. You're just following it. Helps with your consistency in your trading. You're following the system. So in the cup and handle, if I had my stop loss there and I put it there, what system is that? There's an infinite amount of systems in that case. I'm not following a system, following what I think. And what you think and what you know is completely different. Write this down. The trick is to be, don't be self-focused. Be market-focused. When you put in that trade, there was a reason why you put in that trade. There is a reason why you got in there, and there is a reason why you put your stop loss and your reward. And anything that is different is not your system. You're trading then based on your guesswork. So now, my name tag just went skydiving. Let me just put that back on there. So now, let's take a look. Oh wait, saves you from a freak event. Terrorist attacks. You don't know what's happening with the crashes. You don't know what's going on. Let's take a look at the euro dollar as an example. This is a typical example of a stop loss. The non-farm payrolls, as the doctor mentioned, very important. Has anyone seen this chart before? Exactly this chart. Hands up. No. Interesting. I'll put this in, I don't know if I put this in one of the articles. But anyway, so now what happened was the market was up. Everything was great. Everything was grand. Everything was going up. Doesn't it look like it's going to continue going up? And what happened? That number came out worse than expected. The market panicked like you have no idea. And this here, and actually most of it's cut off, but this here was 150 candles of 1 hour charts. 1 hour candles. And it only took 4 candles to wipe out whatever happened of that 150 hours. This is the reality of trading. Gentlemen and ladies, this is the reality. And this is what I'm trying to emphasize. is that no matter how incredible your system is, you don't have a stop loss, no matter how good it is, that can happen. And it can happen again. You don't say, oh no, it's happened once, it's not going to happen again. This is a precedent, and this can happen again, and this will happen again, and I'm almost guaranteed that it will be worse than this. So I put my stop loss. Say you put your line there, you see a nice support. Put my stop loss just there. Market crashes down. I'm not panicking because I got a stop loss, but I'm quite surprised. You know, what is this? I haven't seen this at all. Maybe there. And then I say, that's it. I'm getting stopped out. I get stopped out. I say, it's going to turn. It's always going to turn. In this case, it didn't. 200 pips. Okay? Now, you're talking about your leverage. Now we're talking about your risk, make 100 Rand a pip. Wow, that's good money. Make 1,000 Rand a pip if you're short. Good money. But it could have gone the other way. And that's very important. Non-farm payrolls, I don't trade. What about others? You can't just say I'm going to put a stop loss when there's non-farm payrolls. This is going to happen with anything. Jobless claims, sentiment, Michigan, Bernanke decides to say a word, Draghi starts talking, Buffett wants to buy something. All of these are factors to consider in your trading and should emphasize you that a stop loss is very important. And you see where I put my stop loss. I mean, it kind of makes sense because above here it looks like bull mode and below here is bear mode. Sideways. The overtrading. This is me in 2007, 2006. I was obsessed with this. I was obsessed with overtrading and seeing the markets constantly and seeing how it works. No, actually, this was 2008, 2009. Sorry. 2006, I didn't really have that good technology to trade like everyone else does today. So overtrading is the only way to succeed. Another mistake. You say, I'm in trading now. I want to get in now. I'll wait a week just to get in one trade to make 30 pips. Sounds terrible. What's the point? I've got a strategy. That's the way it is. I'm going to follow it. I don't want to just get in and say, I'm bored. I want to go trade. This is a business for me. It's not a hobby anymore. So here is your leopard. Who read the leopard article? Anyone? The waiting for a week to pounce? Basically, what I'm trying to say here is that even a leopard does this. A leopard analyzes risks, even whether it's subconscious or whether it's conscious, doesn't matter. It still does it. So he's waiting for that springbok in the veld. He's waiting for the springbok, and he can wait an entire week to pounce on that springbok. The thing is that this is one of the fastest animals in the world. Not the fastest, but one of the fastest. And it knows it can catch a springbok. And yet, it still waits. Why? Because it wants that high probability time. It wants the injured springbok. It wants the frail springbok. It doesn't want the strongest springbok and all that. Could get away, but he wants to go with the one that probably won't get away. But they still can get away. Even the disabled springbok can get away. So, so it all depends. So when you are, let me show you it over here. When you trade correctly, it's boring, it's serene, it's repetitive, but it's smooth sailing. Just following your rules of engagement, similar to a leopard waiting all day for that opportune moment to pounce on its prey. Bring home food for the family. It's boring, but at the end of the day, you'll be rewarded for keeping calm and patient. Any questions about this? I'm sure many people are saying, I didn't think trading was like this. Trading is like this, but it's rewarding. But it doesn't need to be rewarding in a day. You're going to be doing this your entire life. Forex is not going anywhere. The stock market is not going anywhere. You don't need to rush and make money now. Gain consistency, gain your strategy, and follow it and enjoy it. It's an incredible ride. It's a great ride, and it's nice to know when you have a system in place. 5 points to never overtrade. So, here are my tips. limit a certain loss percentage per day. So if I take a 2% loss on my portfolio, I'll call it a day. I don't want to have that in my mind, the revenge trading mentality, the you know what, I want to fight the market. I'm better than the market. I don't want to have that. So after 2% of my portfolio, not on my margin is, it doesn't work like that. I base my decisions on my portfolio. So if I limit 2% of my portfolio, I'll call it a day. I can take another loss. The market's not going my way today, so what? It'll come back, it'll be here tomorrow. What's 2 cents of 100? Remember? Put your take profit and stop loss levels in and let the market do its thing. Won't that stop you from overtrading? Because you've already got your levels in. Leave it alone. Go, relax. Next one, if you have banked a certain amount of a day, enjoy the rest of the day. This is not a casino. You don't just make something and say, I'm going to go make more. You go bank it, you enjoy it, you walk away, and you say, you know what? It was a good day. You don't need to say it was the best day of your life, because then you're going to have the worst day of your life. For every upper, there's a downer. Every yin, there's a yang. Everything equalizes. Limit how many currency pairs you are open at once. There we go. There's another way to overtrade. Just trade all the currencies at once. No. I'd suggest less than 3 at any one time. I trade 1 at a time. There's enough going on. I don't want more panic. Even though the system's lined up and all that, rather let me just trade 1 and follow it, and I'll look for the best system. Remember, this is very important. If trading is self-fulfilling prophecy in terms of the patterns, with your double bottoms, your cup and handles, and all those other patterns, look for the ones that are the sexiest. The discipline cycle. This is it. This is the cycle that you need. This is probably all I can think about that you need in order to be a successful trader. Is you need to keep to your system. You need to keep consistency with your trading. Follow your one system. Can I tell you this? Say I've traded 9 years, but I've traded 9 systems. I haven't traded 9 years. I've traded 9 years. I've traded 1 year 9 times. I'd rather have 9 years of experience with one system than 9 systems and 1 year experience. Does everyone understand what I've just said? Good. So if I say I've gone through 20 systems and I still haven't found the one, and I've been trading 9 years, it's not impressive. If I've been saying, you know what, I'm so confident with my head and shoulders, I'm so confident with my losses, I'm so confident with the way I trade, and I'm realistic, I love my losses. Do you know that? I love my losses. Am I mad for saying that? Who says yes? Put up your hands if you think I'm mad for saying that I love my losses. No, it's got to be one. There we go, another one. Who thinks I'm mad? Well, let me tell you this. If I had a winning system and I never made a loss, is that a real system? No? So if I had a winning system and I took 10 winners, should I not be jittery saying, I'm going to make a loss soon? I need to equalize the market. I'm not better than the market. I can't predict the market. So why do I love my losses? Because I have a specific win-loss ratio. I will win 60% of the time and I will lose 40% of the time. My winners will outstrip my losers, and that's realistic. Okay? In fact, last year, I had a system that had 40% winners and 60% losers. And I was just as proud. Why? Because my winner was always more than what I was willing to risk. And that's a winning system. You can have a 90% losing system and a 10% winning system, and you can still make money. Does everyone understand what I'm saying? This is very important. Is that it's not about the I win 80% of the time. It's not about the, so how did you do in the stock market? Oh, I won, you know. You don't win in the stock market. You had a good day. You had a good gain, and the next day it's going to be a little bit different. You know? So if you trade once and you hit a lottery and then you feel good about it, and then the next day you say, I'm going to win again? No. Your chance is always the same. You don't know, actually. The chance you don't know. Because you cannot predict the market. There are so many things in the market that are happening at any one time. You cannot predict the unforeseen. You cannot predict what is going on in the currencies. There's $5 trillion. What is it? You know, how do you go and see what's going on in the market? So you start off with your discipline. You trade your strategy years. Develop that strategy. Gain consistency. And you'll feel pretty confident about yourself. You don't need to go to someone and say, you know, I lost today, but I'll win tomorrow. You don't need to say that. You can be proud of your losses. You can be proud of your winners. If you are devastated about your losers, you're probably risking too much, or you are probably still in the stage that losing on the stock market is wrong. And losing on the stock market is normal. It is 100% normal. And any marketing ploys are saying the market is, you know, there's a 100% winning system, either lying to you or telling the truth and been using it for a month. This 60% winner that I get and 40% losers, this is over 7 years. You know, still doesn't mean that that is my win-loss ratio for the future. Can change. But I know that after a certain level, which is a drawdown, after I get 15% drawdown, I'll call it quits. I'll reevaluate and say, you know what, the market's changing. I need to reevaluate what's going on. I need to reevaluate the risks. But in this case, my confidence at the moment is pretty good. I'm feeling good. I don't need to boast about it. I don't need to do anything. It's a business. 7 years of doing something you're not still celebrating. It's just a natural way of going about it. As a new trader, it's exciting. I'm sure you would love to make your new trader. I was telling the doctor when we were chatting, saying that I still get that feeling that when it is my birthday, I'm going to make money on the market. Just because it's your birthday does not mean that the market knows it's your birthday. And as much as I realize this is true, you know, I still have that I'm going to make. Or, you know, I made money on my birthday. It doesn't work like that. It's like a business, you know. A business isn't going to go great just because it's your birthday. In fact, the business is going to do bad because you're going to be on leave. So it's exactly that. So you gain your confidence through your consistency. Now, what is consistency? Is it a month of trading? Is it 6 months? Is it 12 months? The consistency is when you feel like, you know what, you've seen what goes on in the Forex market. You see what goes on by trading. And you can see here, patience. The fact that I'm waiting an entire week for one lineup of a head and shoulders. Maybe there's tons of head and shoulders that I'm not even seeing. You know, maybe I'm not seeing these things, or I'm seeing them and I don't find them sexy enough. I want to find that perfect probability trade. Doesn't mean I'm going to win it, but it's a higher chance. You know, it's all based on probabilities at the end of the day. Once you have your patience, consistency, and confidence, the profits and success will come over time. It won't come in a day. It won't come in maybe, I don't know, a year. I don't know. But I would say 3-4 years. That's when you can say, you know what, this is trading. This is realities of trading. This is how to go about trading. And then it goes back to discipline. You know, are you going to change your system? Maybe. Maybe the market's going to change dramatically. You're going to find something that's better for you. I've been using breakout systems for 7 years. I used indicators for years. I used swing trading for years, like, you know, just going up and down with the market. It all depends on what your personality is. Trend trading, fantastic. Does suit my personality, but breakout trading is a little bit more, you know. So I'm not here to bash any system down. Systems all work. Moving averages work. Follow 50 and 200. It works. Okay? Because it's very popular. The more popular a moving average is, for example, the more it's probably going to work, because this is another self-fulfilling prophecy. Support, resistance, trend lines, and all that. But if your system doesn't incorporate moving averages, leave it alone. Don't care about what other people's moving averages are doing. That's a different system. What you do on 10 minutes or in an hour is different to the guy in a monthly or weekly. Can you imagine you go long and the guys that are trading weekly charts go short, and you phone them and it's like, no, I've just gone short. And then you feel bad. You're like, oh wait, but I've gone long. They're not looking at the same, they're probably not even looking at a chart. Okay? They're not looking at what you're looking at. No one's looking at what you're looking at any one time in this entire world, in terms of the way you've gone about your trading system, your trading strategy, your trading personality, your trading time frames. You know? Hands up, who would like to take, say, 5 trades a day? Hands up. Anyone? Yeah. So we've got that are willing to take 5 trades a day. There are high frequency traders that are doing great. There are guys that are taking 1,000 trades a day at brokerages, and they are doing fine. They're not guessing when to get in. It doesn't sound like they're just buying, selling, buying, selling. They're still keeping strict to their stop losses. They're keeping strict to their rules and their few money management rules. Hands up to those who want to hold for more than a week. I think I've scared everyone with currencies. All right, well, sorry about that. Hands up to those who want to hold in the beginning of the day and maybe close at the end of the day. Great. Well, that's the way it suits me as well. So I'm glad it will suit you. But you're going to have to go out there, try them all out, and see what happens with trading. And here are questions and answers for anyone who's got questions on any systems, on anything with regards to trading. You take your stop loss. So, let's say you have your take profit there, and the market moves there and then continues down. Okay? What do you do in that case? Follow your system. Write that down. At all times, follow your system. If it is 1 pip away from your take profit and then it goes and hits your stop loss, feel proud that you kept to your system. As soon as you move your take profit down, you've gone against your system. You've completely gone against your system. And that's wrong. You put your take profit there for a reason. If it doesn't reach there, so what? You follow your ROE, rules of engagement. The model will reward you in the end. You move your take profit, you will move it again. And you'll move it lower and lower. And then your risk reward changes completely. So, I hope that answers your question. Anyone else? Yes. The first thing you do in your pamphlet, actually, there is brokers inside. It will talk about Global Trader. Again, I recommend, Global Trader. Give them a call. Go use them. Again, I always say you must start with a demo account. Start with no money. You've got nothing to risk and everything to gain in terms of developing your system. I use Oanda, oanda.com. It is the simplest. I've been using it for years in terms of looking at the charts and demo account. It'll give you a fictitious portfolio of £100,000. You can play around with it, learn how the markets work. Oanda.com. OANDA.com. Sign up there. You can spend a year, 2 years, because the trick is, if you want to trade now with money, great. Put as much as you're willing to risk. And remember, does everybody, who doesn't know what a learning school fees are? And it's got nothing to do with school. So hands up if you don't know what school fees are. Okay? So school fees is the fees that you pay to learn to trade. And you want to keep your school fees as low as possible. Don't risk a lot when you've just started trading. You know, the confidence will gain as the more experience you have. Confidence does not gain with money. That is false confidence. If you've made a ton of money, bunch of money in a month, that should be false confidence. If you've made good money over 3 years, that should be genuine confidence. You've done it good. That's a nice achievement. So congratulations. So yes, start off small. Or don't start off with anything at all. Start with your demo account. Try a few years and go about it. I'm sure you'll gain incredible experience. Make, lose, gain experience. Anyone else? Question? Yes? Yes? Do you understand slippage? No problem. No problem. So let's say I want to get in at, can we say 100 pips? Let's say 1.0100. Well, let's just say 100 for now. 100. I want to get in at 100. And I want to make 20 pips. Okay? My level is at 100. The market bounces and I get in at 110. Those 10 pips that the market's gone up should be my profit. So I got into a level that I didn't want it. And this very often happens with emerging markets. And there is something called, there is minor currencies. There's emerging markets. And there's very strange currencies, even Hawaiian currencies. I mean, there's a whole bunch of currencies. And you'll notice that the market gaps too many times. When you see a gapping market, you know that you probably don't want to be in it. Any other question? Does that make sense, a slippage? You've gotten in the level that you don't want to get in, and you've wasted pips that you wanted as profit. Okay? It slipped away from you. Anything else? Yes. It depends on you. If you trade on daily, you're obviously not going to be holding intraday. If you want to hold overnight, if you want to hold during the American time, I would trade from 30 minutes to an hour. Because 4 hours, and it's going to be 1 o'clock. You need to sleep. You know. So if you want to hold intraday, I would say from 10 minutes, why not? Depends on you. 10 minutes to an hour. Anything more, and you're probably going to hold overnight, or you're probably going to have a sleepless night, or you're going to stay awake all night trying to hold on to your position. Thank you very much. I appreciate it.